Let's touch base with Dhirendra Kumar to speak about the biggest question at the minds of almost all the retail viewers who are watching it right now, with the yellow metal heading southwards. What should your strategy on gold investments be? Dhirendra, good having you. Thanks so much for joining in. The obvious question, with the prices coming down, is it a good time to enter into gold funds, whether via SIP route or just a lump sum buy?
No, I think it is a great time to run away from gold funds. Simply because, we have seen a multi-year bull phase in gold prices, and I think the reversal has started. It is very sharp. The character of gold has changed, and investors should run. Indian investors, financial investors have not a very significant exposure to gold, but whatever they have, I think it is about time, because what we see is, the changed character. It has the potential to drive a significant decline. We can well be in for a multi-year bear phase, simply because, there was a combination of factors which led to the attractiveness or led to this, I would not say bubble, but, the mad gold chase. And we will see a reversal, and the reversal is of such a sharp kind that it will be very difficult to survive this. So investors should keep away. It is fundamentally, it is an unproductive asset. And you have, any investor will be much better elsewhere than, trying to dabble in gold at this point.
Dhirendra, for those who already have SIPs in gold funds, does it make sense to increase the SIP amount?
No, I would say that on the contrary, investors should stop their SIP, pull their money out, move into productive asset. And anyway, you have seen through the questions that we have dealt with over the past 1.5 years, that investors were pretty excited about gold fund, and we were normally discouraging them. It was an opportunistic investment, and that opportunity is gone. People should keep away. And so if you have SIP, stop that. If you and take your money out, don't think of dabbling in it. It's like catching a falling knife.
Dhirendra, those who have started investing into gold-linked funds in the recent ones clearly have nothing to cheer about. What would you advise such investors to do?
Absolutely nothing. Even those investors, there is absolutely no difference between gold ETFs and gold funds, except that gold funds cost little more and it provides the convenience of buying it. And since gold fundamentally has become unattractive, and we have seen this change, of course, so they should pull that money out, save the expenses, save the money, and try and preserve whatever they have. Because if you think in terms of, there is always this, people's, once you buy an asset, you get locked into the value, your purchase, your acquisition price. I think it is worthwhile getting over it. One should look at it as an opportunistic investment and a play which did not materialize.
Dhirendra, so what kind of allocation should one be looking at, to gold in one's portfolio? Is it a good idea to ramp up the allocation when gold prices are crashing?
No, I think, there was a scope, or, there was a logical case for having any meaningful allocation. And even when investors were excited, were quite tempted to invest in gold, my thinking was that a lot of people can't save for a future consumption requirement of gold. So if only that money which you think at a future date you need to consume, and you will be selling those ETFs and, or doing a SIP in any of these gold funds and exchanging at a future date, only that made sense. And so and that still makes sense, if you need gold for consumption 10 years from now or 5 years from now, and you really don't have that money saved for that goal, and you are averaging your investment in gold periodically with the small sums of money, and at a future date exchanging all that with real gold. That is the only case in case of an Indian investor, where, as part of our culture, gold plays a role, marriage, ceremony, daughters, wedding, I think it plays a role. So, it is a way to accumulate savings for consumption. Nothing beyond that. Don't think of it as as any meaningful logical thing as an allocation in your portfolio.